All right, welcome all new students. Thank you for taking the time to even watching these video lessons. Here is a basic guide to what I teach. And everything I teach is just rules and lessons that I've learned in 15 years of trading. They made me a millionaire by age 22. They've now made two of my students millionaires. You can see all of my trades. You can see all of Michael Good's trades, how he's made 1.3 million. He was my first millionaire student. And you can see Tim Grittani's all of his trades from starting with just $1,500. Now he's up to 1.73 million in just over 3 years since becoming my student. One of the best tools was taking him to the Maldives when he just crossed like $100,000, because then we traded live, and he saw that was his first time overseas, so he saw why he needed money, because it's freaking amazing to travel, especially to the Maldives. I hope you guys all get to experience that and similar luxuries. That's why I post pictures of the Lamborghini and my watches and my mansions and my trips and everything, because life is beautiful when you're financially free. It's not to say all you need is money. I'm not saying that, okay? I'm not trying to say money is going to make you happy. All I'm saying is that money changes your life for the better. Okay, if you have the right mindset. If you're just like, oh, life is only about money, then I can't help you. But if you go into this and you get into the stock market and you get into trading specifically to get, self-sufficient, wealthy, pay off your debts, help loved ones, if you use money for the right purpose, then it's great. And you can have a lot of fun with it. Although I don't recommend going over 170 miles an hour in a Lamborghini. I get very nauseous, and it's very, very ugly. Anyways, here is a basic guide to just what I think many people have questions about, because I keep getting these emails every single day. So brokers, SureTrader, I recommend for under 10,000 and especially for under 5,000. If you mention my name, you get some freebies. They have customer issue problems, they have software problems, but if you're going to use my strategy, every now and then there's going to be a great shorting opportunity, and SureTrader has had shares, namely in the past few weeks, MDBX, when I was shorting it in the low 20s, SureTrader had shares to short, and it went down to, I think, 16 or 17. So there was I shorted it, I think, at like 23, so there was like $6, $7 a share of downside. VAPE, SureTrader had shares. That thing dropped from like 14 down to the 2s in a few weeks. SureTrader had shares. So they have problems, but they have shares to short. Interactive Brokers is a better platform, just as bad customer service, but you need 10K. And they have a lot of shares to short, not all the time, but I would recommend them if you have between 10 and 30,000. If you have over 30,000, my high net worth broker all the way. Contact me for an intro. I don't give out the name because I don't want people just wasting it. And then also, if you say, look, Tim Sykes referred me, then guess what? I can take care of you, because they don't want to piss me off, because I refer them a lot of people. And if you ever have problems, you come to me. I can get it solved much quicker than the average random person. It's a nice little benefit. Stocks, stay 100% liquid, aka all in cash, until there's a perfect setup. Resist the urge to scalp. I know this goes against what brokers want and what the financial media has taught you and what a lot of traders think is the key to getting rich. I have never met a self-made millionaire scalper, okay? I've never met anybody who, goes from 1,000 to 1.7 million in, 3 years, making 10, 20 cents a share on Amazon and stuff like that, okay? That does not exist. Maybe there's one out there, but I haven't met him. So I like to stay in cash, ready, waiting to strike only when the time is right. And I know this is difficult. This is actually the most difficult lesson that I teach, where I'm a full-time trader, I'm a trading coach, and I'm telling you not to trade. I like to think of myself as a retired trader. And the only way I come out of retirement is if a trade is good enough, if a setup is good enough based on the indicators, and that pulls me out of retirement, because then I'm like, oh my God, this trade is so good, I can't afford to miss it. If you think like that, you'll be surprised how much better you do, rather than just going in, oh, this biotech stock looks interesting, let me buy a little. Oh, that's moving fast. Oh, let me just trade this. People trade random tips and gut instincts, and those aren't the trades that get you rich. They're the fun trades. They give you action, and they make you think that you're learning and you're getting ahead if your gut instinct is right. But the gimmies, the obvious breakouts, the perfect technical breakouts with the perfect earnings reports, like my buy on VDSI in the low 9s before it went to the low 11s in just 3 days. Those are the ones. Also, buy any stock with earnings, contract win, or rumor catalyst that can spike 10, 20, 50% in a few days. A lot of people didn't like my VDSI buy at 9.25 and 9.35 because they're like, Tim, it's not a penny stock. Eh. Well, it had a multi-year technical breakout, as I went over with the video lesson. The earnings were good. The product is good. The sector is hot. And it was, finishing strongly. So it had good price action. And I thought that there was a good chance of an analyst upgrade, just like always when I buy an earnings winner overnight. And guess what? We got the analyst upgrade. We got the morning spike, and I got out for a small profit. And I sold way too soon. But I still made, what did I make? Like 6,000 or 7,000. If had I held 3 days, I would have made like 40,000. That's the kind of stock that you can really bank on, where the risk is limited. Also, short any stock with an expose, technical breakdown, or a fading pump and dump that can drop 10, 20, 50% in a few days. Again, I would love to trade stocks between $2 and $5 a share. That's my sweet spot, and try and make like 50, 75 cents on any big spike or big drop. But sometimes you have to go out of your comfort zone. Well, I guess I'll give an example just because I mentioned it. Expose. ARTX, I shorted at 450, on the rumor that there was going to be an expose. The expose did come out the next day, and the stock dropped from 450. Within 3 days, it was at 330. So I could have been right for 30% gains. Instead, I covered right at the open because it looked like it was getting stronger at like 420ish, and I only made 30 cents a share. But I still locked in $16,000 because I took a big position because I thought the expose would happen, and the price action made me think that the risk was limited even if the expose didn't come to fruition, and I banked. Technical breakdowns, fading pump and dumps. That was my short. This describes my short of VEND perfectly. VEND was one of the biggest pumps of 2013, 2014, but every pump dies, and as it was coming down, it came all the way down, and then it bounced a little bit, and shorting into the bounce. This is a classic number 6 pattern from my 7-step penny stocking framework DVD, which too many of you have not watched. So I was betting on it cracking 5. I got held up for 2 days by a penny stock promoter employee, but in the end, I won. It dropped all the way down to the 3s. I covered way too soon in the 4s because I like taking profits. But nailed it, and I made 20 grand. If you focus on buying stocks that can spike 10, 20, 50% and drop 10, 20, 50% in a few days, I'm not talking about stocks with exciting stories that no one has heard about or something that's going to play out over 3, 6, 9, 12 months. I'm talking about within a few days. You strike quick like a sniper, and you get in and you get out. And, sometimes you're going to cover too early, like on VEND, where what did I make, like 8% or 7%? Where, yeah, I guess I could have made like 30, 40%. Boo-hoo. I'm going to screw up a lot and take partial profits because I'm just trying to take the meat of the move. And that is the strategy. Aim to capture the meat of the move. If the stock doesn't do exactly what you want, get out. A lot of people come to me and they say they're scared of trading. They're like, there's so many stocks, so many potential movements. I'm afraid of losing everything. Trading is not scary if you follow the rules. I make the analogy where I'm like this, driving educator, where you're going to driving school and you have some guy sitting next to you and you're like 16 years old and he's telling you, okay, do a 3-point turn here, stop at the red lights, use the stop sign. And there's specific rules that you've learned, growing up visually. You know what a stop sign is. I don't know by what age. You know what a red light means, what a green light means, unless you're colorblind. With the stock market, it's very similar. Unfortunately, the rules are not taught when you're younger. In fact, the rules are not taught to most people. So when you have a loss, my rule would be to cut losses quickly. But a lot of people don't know that rule. And so they let their losses grow 20, 30, 50, 70, 90%. I hear horror stories from people invested in these marijuana stocks, like from the Wolf Pack, and they just didn't cut losses. I got in a Twitter fight with people on the Wolf Pack because they're like, rule number one, you don't take losses. Rule number two, follow rule number one. I was like, you guys are fucking idiots. You have to cut losses quickly every now and then. Sometimes you're just going to be wrong, and sometimes the stock isn't going to do exactly what you want. I could teach you all day about patterns and indicators and the odds and, why I think a stock is going to jump 10, 20, 50% in a few days, but I could be wrong. And you have to accept that. I'm winning roughly 73, 75% of the time. My 2 millionaire students are winning. I think Michael Good is like at 65%. Tim Grotani's in the 70s. But, none of us are making money 80 or 90% of the time, or let alone 100% of the time. So every single great trader, and I should mention Greg, LX21, who's a Penny Stocking Silver subscriber, longtime subscriber, he's over $5 million in profits in the first 4 months of 2014, his best year ever. I'm up, 550,000 in the first 4 months, so I'm on track for my best year ever. Tim Grotani, I think, is up like 700,000. Michael Good is up a few 100,000. The successful traders that I know, Superman's up 650,000. The most successful traders that I know, we all have losses sometimes, but you have to cut them quickly. I hate getting emails from people saying, Tim, I should have listened to you. Now I'm down 50, 70, 90%. What do I do? I don't know what you do because I don't put myself in that position. People ask me, what brokers, is it okay to use E-Trade and SureTrade or E-Trade and like ShareBuilder and Scottrade? Yeah, it's okay, but you're going to miss out on potential trades. Do you always have to cut losses quickly? Yes, that's not optional, okay? If you get yourself down into a big hole, I don't know what to do because I don't know, what the stock is going to do when it doesn't do exactly what I want. I have one thesis. When I go into a stock, if I'm buying, I think it's going to go higher. If it doesn't do that, my thesis is wrong. I don't know what the stock is going to do anymore. If I'm shorting a stock and I think it's going to drop substantially and it doesn't, I'm wrong. I get out. That's the way I think about trading. And it's sad that many traders don't think this way. So when they say, oh, I'm in this position, what do I do now? It didn't do what you want. I don't know. My thesis is shot. Now it's guessing game, okay? It's guesswork. And when you use guesswork, sure, if you hold, it might come back, but your odds are like a coin toss. So, I cut losses quickly because I never want to be in the coin toss situation. If you put yourself in that position, you hurt your odds, you hurt your confidence, and you hurt your ability to get rich very quickly. And then you're just in this for action. And then you're a degenerate gambler like most of the people who go to Vegas. And I hate that because if you use the stock market and specifically penny stocks and penny stock volatility correctly, you can grow your account very quickly by following this whole framework. And I know it's simple, but simple works. I got this one famous hater, this email, and he's like, Tim, you trade such gimmies. Why don't you step up and be a real man and trade real stocks? I want to trade gimmies, okay? This isn't the Olympic diving competition where you get graded on difficulty level. I get graded based on how much money I'm making, how often I'm right. And my stats are fucking off the hook, especially compared to the, quote, pros. But they're trading with big money. They're trading a different game. Stop listening to hedge fund managers and mutual fund managers whose entire goal is to make 20% while, managing $1 billion. They need to keep multiple positions at a time. They need to have, analysts who are giving them advice on what Asia is going to do and what gold is going to do and what Forex is going to do. You don't need to do that. You need to be a sniper. Stay 100% liquid. Stay all cash and only come into the market when you can substantially grow your account on a trade here or there. That is your key to success when you have a few $1,000s or 10 or 50 or even $500,000 to your name. In 4 months, I've grown, my $500,000, which I start out at every year. 500,000. Now I'm 1.05 million. I mean, that's growth. That's over 100% growth in 4 months. Mutual funds and hedge funds would kill for this, but they can't do that because they're playing a different game. And you have to realize that. So when you're watching CNBC and reading about people's picks in the Wall Street Journal, they're not trying to be right 70, 80% of the time. They're not trying to grow their account exponentially. They're playing the odds. And I want you to play the odds for your account too. So you can grow your account exponentially and become my third millionaire student. Thank you.